Good morning everyone. Nandito na naman tayo sa ating money tips for everyone na kung saan nagbibigay ako ng mga money tips kung paano natin i-handle, kung paano mag-grow ang ating hard-earned money. For today's discussion, pag-uusapan naman natin ang pag-analyze ng stocks using fundamental analysis. Kung handa na kayo, mag-start na tayo. Mga kahuwan, kung nakikita natin very informative ang mga topic natin for this channel, please do subscribe and smash the bell button para lagi tayong updated sa ating mga new uploads. And please do like and comment na rin po ng mga topic na gusto niyo pag-usapan natin in our next session. Okay, paano nga ba ang fundamental analysis? Kung mapapansin nyo, in our last series of sessions, di ba, madalas pinag-uusapan natin is yung technical analysis sa pag-a-analyze ng stocks. Okay? So, pag sinabing fundamental analysis, hindi tayo masyadong nakarely sa sasabihin ng chart. Okay? Saan tayo magbe-base? Magbe-base tayo sa company itself. Okay? Kung kumikita ba yung kumpanya, nag-expand ba to, nalulugi, di ba? Paano ba yung finifinance yung expansion nito? So, something like that. Okay? So, pag-usapan natin dito yung common parameters or indicators na tinitingnan ng mga investor. Yun, take note yung word ko, no? Pag mga investor, usually tinitingnan nila fundamentals ng company. Say, a short to mid trader, ang tinitingnan po nila is yung technical analysis or yung technical charting. So, ang unang tinitingnan, fundamentally sa isang kumpanya is, siyempre, kung kumikita ba yung kumpanya. Tama? Sino bang gusto mag-invest sa isang kumpanya na nalulugi? Okay? Hindi kumikita. So, wala naman po siguro. Yan. So, net income, according kay Investopedia, ang net income, tinatawag ding net earnings, is calculated as sales minus cost of goods, selling, general and administrative expenses, operating expenses, depreciation, interest, taxes, and other expenses. In short, revenue minus expenses. Yun lang po yung net income. Okay, huwag na po natin pakumplikado yan. Okay. So, meron po tayong example po dito, no? So, si company A, si company B. So, si company A, so from 2015, kumita siya ng 7 billion. Then, increasingly, up to 2019, kumikita siya ng 11.2 billion. Okay, so, net income-wise, so, okay yung performance ng company. The company B, no? So, same po, no? From 2015, kumita siya ng 17.6 billion. Up to 2019, kumikita siya ng 33.18 billion. So, increasingly din po. So, pwede din po natin i-check yung percent increase year-to-year basis. So, kita po natin at least 10%, no? Yung performance, no? Percent increase sa net income ni company A, while kay company B is at least 13.5%, no? And as high as 20, almost 21%. No? Yung naging performance, percent net income ni company B. So kung papipiliin tayo, actually both are doing well, medyo doon tayo kay company B, syempre. So mas malaki yung ano niya, no? Percent growth niya. Next na pwede po natin tignan is yung dividend yield. Yan, para sa mga passive investor dyan, no? So, I highly recommend, no? Focus on dividend, high yield dividend stocks. Yan. So, ako, yan din po yung favorite ko. Okay. So, we'll say dividend yield expressed as a percentage is a financial ratio. So, dividend divided by price that shows how much a company pays out in dividend each year relative to its stock price. Okay. Magkaroon din po tayo ng comparison. Okay. Si company A, yan. So, ang percent dividend yield niya is from 2015 to 2062. Then, somehow nag-increase, no? In 2018, ng 4% pa nga. Then, in 2019, 3.36%. Yan. So, si company B naman, 2015, 1.19%. Then, 2019, 1.14%. So, hindi po halos nag-grow po yung dividend yield niya. So, ang nanalo for this round is we'll go for company A. Next is PE ratio. Ito yung commonly guys na ginagamit, no? So, ano nga ba itong PE ratio na tinatawag? Or price to earning ratio. So, PE ratio shows what the market is willing to pay today for a stock based on its past earnings or future earnings. A PE ratio is important because it provides a measuring stick for comparing whether stock is, tandaan po natin, overvalued or undervalued. So, basihan din pala itong PE ratio kung mahal or mura po yung stock. So, PE or 15 times PE, 15 times PE or less. So, ito yung mga undervalued stock, mga kuwan, no? So, mura po siya, attractive po siya, no? So, pwede po natin siya maging entry, no? Bakit natin bibili yung stock? Kasi mura siya, very cheap. Okay? Then, more than 15 times PE naman, so, overvalued or mahal na po yung stock. For comparison po ulit, Company A. So, from 2015 to 2019, below 15 times PE po siya. So, very cheap po yung company na to. Ayan. Then, while si Company B, so, above 20, no? Above 15 times PE. Actually, at least 20 times PE nga siya. So, medyo overvalued, mahal na po itong stock. Ayan. So, yung winner po for this round is si Company A. Pero, take note po mga kuwan, not all the time is laging gano'n. So, meron po tayong mga exceptions. Meron pong mga company talaga na mahal po siya, laging ano siya, no? Above 15 times PE, way above. But still, performing, ang taas po nung grow po nung stock price po niya. Okay, next din po, isa din po tinitingnan ay yung EPS na tinatawag or earnings per share. So, ano po ba ito? So, EPS is calculated as company's profit divided by the outstanding shares of its common stock. The resulting number serves as an indicator of a company's profitability. Tandaan po natin yun. EPS equivalent to company's profitability. Okay. Kawan po ulit tayo ng comparison. So, si Company A from 2015, so increasingly po yung EPS po niya. So 0.56 up to 0.89 nitong 2019. Company B naman, from 2015 na 1.2 EPS, so nag-grow po siya up to 2.25. Okay? So, sino winner natin? So, for this round, it's Company B. Ito, pwede po natin interpret o basahin kung ganito yung EPS, no? So, kada share na hawak mo is pwede siyang mag-earn ng 2.25 pesos per share. Pwede po natin siyang basahin ng gano'n. Next is price to book ratio or PB ratio. So, PB ratio measures whether stock is overvalued or undervalued. Again, kung mahal or mura, by comparing the net value, assets minus liabilities. So, ito yung parang net worth, guys, no? Net worth. Okay, by company versus to its market capitalization. Yeah. PB ratio is a good indication of what investors are willing to pay for each dollar of a company's net value. Okay. So, PB ratio less than 1 means stock is trading just below its book value. So, if yung value ng PB ratio is 1 or less, mura po siya. Okay? Kapag more than 1, mahal po siya. So, explain ko po itong part ng comparing the net value versus market capitalization. When we say net value or net worth, ito po talaga yung actual value po ng company. Okay? Let's say, 1 peso. Ngayon, ano may market capitalization? So, ito naman is based sa perception po ng mga investor. No? Kung nakikita nila ang potential or yung value, napupunsin nila ang value po ng company. So, pwede pong 2 pesos po, no? Nakikita nila yung value po ng company. Although, 1 peso lang po yung book value niya. So, ganun po siya tumatakbo mga kawan. So, for comparison po ulit, si Company A, nakita natin from 2015 to 2019, diba? So, 1 or less po yung book value niya, no? So, very cheap. Compare kay Company B, which is way above 1, no? 9, ang minimum na niya na PB ratio. So, sobrang mahal po siya. Yeah. So, for this round, so, bigyan natin kay Company A. Okay? Then, may tinatawag din po tayong current ratio. So, according kay Investopedia, the current ratio is a liquidity ratio that measures a company's ability to pay short-term obligation or those due within 1 year. Okay? So ito din, ability ng kumpanya na kapag siningil siya ng mga creditors niya for short-term obligation is makakabayad ulit. Makakabayad agad siya. Capable siya makapagbayad. So for comparison, let's say company A, di ba? So 1.9 ang minimum niya, 2015, then increasingly to 2.2, 2019. Kapag daw 2.2 actually mga kawan or more, yung current ratio is very healthy yung company. Okay, kaya niyang bayaran yung mga short-term obligations. So for company B, so nakita natin, no? So halos barely, no? 1 or less po yung current ratio niya. So medyo alanganin po ng company na to, no? Medyo sa pagbabayad po ng kanyang short-term obligation. For this round, we'll go for company A. Then debt to equity ratio. Ano nga ba to? The DE ratio is a stock metric that helps investors determine how a company finances its assets. Okay? Paano daw pinifinance ng company ang kanyang assets or ang kanyang business expansion. Okay? So, sinabi daw, low debt to equity ratio means the company uses a lower amount of debt for financing versus shareholder equity. A high debt equity ratio means the company derives more of its financing from the debt relative to equity. Ito po yung mga kawan. Kung masyado mataas ang debt to equity ratio, di ba? Pwede siyang mag-pose ng risk sa company. Okay? If they don't have the earnings or cash flow to meet its debt obligation. So, yan nga. Pag siningil na siya ng creditors niya at hindi enough ang earnings niya, di ba? So, paano na yung isang kumpanya? Okay? So, medyo tagilid po yun. So, for comparison po ulit, company A, nakita po natin, no? So, from 2015, 112% yung debt-equity ratio down to, diba, nasa pababa niya, na-improve niya, no? Up to 63% ng 2019. Like kay company B, so increasingly po yung debt-to-equity ratio, no? So, medyo tagilid po itong company na to, alanganin. So, for this round, we'll go for company B. Okay. So, marami pa po mga kauwan na parameters, fundamental parameters indicators out there, no? So, ilan lang po to sa mga commonly na ginagamit na tinitingnan ng mga investor. Bakit po sila mag-i-invest sa particular kumpanya? So, I hope marami po tayong natutunan at makatulong po ito para mas tumas po yung winning, di ba? Winning percentage natin as an investor sa stock market. Again, this is Raymond Cruz of Money Tips from everyone. See you in our next vlog.